Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented by Tusk Media. Real quick, give us a follow on Twitter at Tusk Media LLC. We are also on Facebook, facebook.com/Tusk Media LLC. Trying to grow that audience a little bit, going to start ramping that up a little bit more. All our videos, all our archives, including the videos we're going to reference here in just a few minutes, are on YouTube. So you can check all that out, youtube.com/Tusk Media LLC. And a special welcome to people watching on Seeking Alpha. Leave us comments, give us feedback, and try to top some of the more ridiculous things that we've seen this week. I'm Andrew Hall. Joining me today, Ben Nye. Ben, how are you?
I'm doing all right.
Hanging in there. Today we are recapping Snap's earnings. So Snap, of course, first quarter as a publicly traded company, reported earnings. Everybody's really paying attention to Snapchat, which of course is the flagship product of Snap Inc. But we're going to talk about that. If you haven't watched, we did a preview of Snap's earnings and talked about what data metrics we should be looking at, how we should view them, what expectations were, what we could expect, and we kind of called out analysts in that. We felt like they had a misguided view. We felt like there are some misconceptions. To lead off, Ben, a couple things that we missed on. We own a little bit of Snap for clients, not a whole lot. I actually own a little Snap personally, so do some employees here at Narwhal. Again, listen to the disclosure at the end of this video. But not a core holding for us by any stretch, but it is something that we own a little bit of, just kind of on the side there. The two things that really stood out that I think we missed, number one, the ARPU, average revenue per user. Analyst expectation was for that to be flat or even down a little bit sequentially, quarter over quarter. It was down a little bit more than I would have expected. So did not expect that. We knew it was going to be a seasonally weak quarter just for advertisers compared to the fourth quarter. We also knew, obviously, there would be some distractions with the IPO and things like that. But that seems to be the first thing that we were off on.
Yeah. It seems like what happened in the quarter for Snapchat, if I'm a Snapchat apologist, and you kind of walk that thin line between, are you just apologizing for the company and your positioning and your prior view, or are you having rational thought? And it's a lot easier from an outside point of view to kind of diagnose that, but that's what happens in investing. It's plays mind games with you, plays psychological games with you. So if I'm coming from the standpoint of a Snapchat apologist, I say, they came out with an IPO in March. So what was management thinking? Was management thinking about, we're driving advertising revenue, we're solely focused on user growth and driving average revenue per user and developing ad tools? I mean, yes, that was a focus, but they were also paying attention. We need to maximize our IPO for our employees. What are the employees thinking about? The employees can continue to think about maximizing the value of what they do and really driving the product forward. But at the end of the day, if you're working at Snapchat, you're still a relatively early employee. You have stock options, and you want to know how much that stock option is going to be worth. Do you really think the water cooler conversation at Snapchat is about how to build a better ad platform? No, that water cooler conversation is going to be how much am I going to be worth at the end of March?
Right.
And that's just the fact of the matter. I mean, if Tusk Media went public, that's what we'd be thinking about too.
We would not be making videos.
We would not be making videos. So you kind of get into that dilemma. And then you saw the same thing with Facebook at that time. But taking a step back to what you were talking about with average revenue per user, yeah, I mean, there was more of a decline than we would have liked. But what I really like to see is that they're providing tools for advertisers that the advertisers really want to see. One of the big things that we've been harping on, and which has been a concern for Facebook and for other, even Google to an extent, is really having that trackability about, we're paying this much for advertising on Facebook, but what's it actually doing? Mm-hmm. One of the interesting things that came out of Snapchat's call, which is kind of buried underneath the stock being down 20%, one of the interesting things was that they're able to track users you use Snapchat, you see an ad, and then they're able to see, like, did this person actually go into a store? And I think that's huge, and it really boosts the efficacy and shows the efficacy of the advertising platform. And I think that's something that Snapchat can continue to leverage as long as it continues to progress that technology.
Yeah, and they used the example on the call. They talked about, they ran an advertisement, a series of advertisements for Hollister, the store, I guess, owned by Abercrombie & Fitch, and kind of under that umbrella. We don't shop there, but they ran an advertisement for a Hollister, and they were able to see that 63,000 people who saw that advertisement on Snapchat visited a Hollister store within 7 days. Now, we don't know how many of those people would have visited a Hollister store to begin with. Maybe it would have been 63,000, maybe it would have been 55,000, 50,000, who knows? We don't really know that data, but what we do know is that they're able to track that. Yeah. And that's really compelling if you're thinking about advertising. If Tusk Media opened up a brick and mortar retail shop where we sold CD copies of our podcasts, it would really be nice to know that, hey, if we advertise, how many people actually walked into the Tusk Media store. We wouldn't necessarily know immediately, how much did each of those spend necessarily. We might not be able to track it that well, but we could say, hey, 63,000 people came into the store. That's a big number.
Here's a great application. Yesterday in our little office park here, there was a popsicle stand. And these guys came around with popsicles, with these like craft popsicles. And, they come up with a filter that gets passed around in this region, in this, maybe I call it a 3-mile radius. And they're able to actually track, who actually came to the popsicle stand, and like what was the ROI on that, which is really important, and it really goes to show it goes beyond what's just a paid per click or what's a paid per impression. Like, what is actually a value of a click? What is the value of an impression? You can actually start to put numbers behind that, and that's what advertisers want to see.
So, ARPU, a little bit of a disappointing number, but I guess the good news is, we're seeing progress, and also year over year, just staggering growth on every metric. That's one of the frustrating things if you're a Snap shareholder, is if you actually look at how this company is actually growing over the last year, it's really impressive. It's really vital to kind of take a step back, I think. Other thing we missed on was not so much the daily active user number. Came in at 166 million, well within our realm of expectations, and I think even on the upper half of what we would be looking for.
Right.
What we really missed on was what the street was expecting.
Yep.
We consistently saw a range of 163 to 168, but one number that really got us worked up yesterday was the Bloomberg number that's presented almost as a consensus. They took 6 analyst expectations for daily active users, which is the metric that a lot of people look at first and foremost with any kind of social media app. And they came out with an average of 168. So 168 million active users became kind of the de facto expectation.
That's what you're seeing on all the headlines, 166 versus estimate 168, when that estimate is based on 6 estimates compiled by Bloomberg from second-tier shops.
Yeah.
Like Aegis Capital, Cantor Fitzgerald, Susquehanna, Monness Crespi, which had 173 million target, RBC and Cowen. We have access to Merrill Lynch, JP Morgan, and Morgan Stanley relatively easily. Bloomberg definitely has access to that.
Right.
Merrill Lynch and JP Morgan were both at 166.
So if you look at that, in line, and that's one of the numbers we looked at a lot.
Morgan Stanley was 164. Interestingly, JP Morgan's revenue expectation was 136 million, and they came out and Snapchat reported 149 million, a huge beat. But because the estimates are skewed up, you have the official estimate at 159 million, so it looks like a massive miss. So, there's all these dynamics at play, and the algorithms just trade on this, and then it becomes a self-fulfilling prophecy with the small flow.
And probably the most frustrating one to us, and we tweeted about this on the Tusk Media Twitter account last night. And we're not mincing words. We'd love to talk to the analyst out there. We're not talking trash. We'd love to talk trash to your face. But Monness Crespi, they don't even have a Twitter account, so that's how you know they're a really legitimate modern-day financial shop. Their analyst had an expectation for daily active users of 173 million. Meanwhile, a price target of $25, which was barely above where the shares were actually trading. That is one of the most ludicrous things I've ever seen. If the stock if they actually achieved 173 million daily active users, the stock would be trading in the $30 range, I think.
Yeah.
So to say, one, I expect 173 million, and two, my price target is 25, you're completely off base with how this company should even begin to be valued. And you really can't find anyone else that was looking for 170 million users as an expectation anywhere else. I think we talked about kind of what's our best case scenario for Snap, and I said 170. I couldn't have imagined 173. So 173 million users was 1/6 of the component that was used by the Bloomberg expectation. So we were off on what was actually expected. And I don't think we were necessarily wrong. I don't think the story on user growth has necessarily changed. But we think it's continuing to be misrepresented. You know, this idea of stalling Snapchat, they actually grew users sequentially, quarter over quarter, at a faster rate than they did the previous quarter. That's accelerating growth.
So the last time they grew users sequentially more than 10 million users was second quarter 2016. And this was, you know, faster than Q3. Sorry, it was faster than Q4. And yeah, I mean, this is they're not spending money in the rest of the world and Europe yet, which is where you saw the big growth from, which is where you're still seeing the growth from Facebook. For context, Facebook grew monthly active users by just 7% in the first quarter of 2013, which was 2 quarters after it IPO'd.
And again, that's monthly active
That's monthly active users, 7%. Snapchat is growing daily active users in North America on an annualized basis by 16 to 20%, which is much faster growth, and I think speaks well to the durability of the platform. And you know, I think that you do have fewer fake accounts with Snapchat, which is something they spoke to on the conference call as well.
A few things that stood out, you know, kind of some finer points, and I know we got more data that we can kind of splice in throughout this. Arguably the most impressive metric to me was that the average Snapchatter is spending 30 minutes a day on this app. And when you start to think about the scale of that, as well as what we know about the audience in terms of its age, and they talked a lot about trying to grow the audience of the population of people over the age of 25. And I think that's a valid point. I think a lot of their kind of Snapchat original content, the shows and things like that they're trying to roll out, I think that makes sense, and that's definitely an effective strategy. But if I were to tell you that there was a piece of programming, ignore the platform, that was viewed for 30 minutes a day by 166 million people, the majority of which are under the age of 25, imagine the revenue potential of that platform, whether it was a TV show, a YouTube series, whatever it may be. I mean, that's a staggering profile, and that's an accurate portrayal of what Snapchat is working with. You take that and you combine some things that they talked about on the advertising front in terms of, number one, they've got lots and lots of runway in terms of ad load. I mean, they were very, very clear. They didn't cite numbers, but they said, look,
we're scratching the surface.
We're scratching the surface is the quote they used, and they even kind of chuckled their way through it. They said, we got people on average spending 30 minutes a day on this thing. We're not getting anywhere close to where we can be on that. The other thing is they talked about kind of their automated ad platform and its placement. You know, basically the idea that we, Tusk, could buy an ad and get it placed just, you know, automated without having to interact with a sales force or anything like that. That's only 20% of the ad load that they've already seen. So there's a lot of room for that to grow, a lot of ways for those advertisements to become increasingly profitable, drive revenue, need less manpower, and therefore use manpower to kind of continue to grow the advertising base. So there's a lot to be attracted to on that story. The revenue number, again, ARPU was down a little bit. I guess somebody would say that the daily active user number was down, although we would vehemently disagree that number was insignificant. Again, I mean, accelerating growth. I mean, we're looking at, you know, an annualized growth rate of close to 22% based on what they did, and you're reading about how it has stalled. It is completely flatlined. But revenue was down just a little bit, but we still think, you know, kind of that full year guidance in terms of that they're not giving, we still think $1 billion plus in revenue. We think higher than that is very much on the table. Just again, if you assume that this is probably going to be their weakest quarter, because one, they were distracted. Two, weak seasonality on the ad platform. Three, continued development of the ad platform. And four, I'm comfortable presuming that the user count continues to grow, even though headlines say it hasn't. It is growing. That's a fact.
Yeah.
I'm comfortable saying that it's going to continue to do so. I think you're looking at still a longer term story here.
Yeah. And I think, so taking a step back a bit, yes, the daily active users on a year-over-year basis, they're showing lower growth.
Yeah.
And that trend looks worse after this quarter. And, people really like to look at that because they like to view growth. And then how do you predict growth? Well, you look at the second derivative of growth, and that's acceleration or deceleration in user count. And we're seeing deceleration on a year-over-year basis. Quarter over quarter, you have a bit of a different story. But, I mean, just that should have been priced in. The reason the stock is down is because we had these phony estimates from a news organization that didn't do its homework. Right? Bloomberg got these 6 estimates from second-tier banks and came up with an estimate that was too high because it, selected the 6 guys who wanted to make the headlines, and instead of the 6 ones who are, at the biggest banks. And so obviously, ones who make the headlines have an incentive to go say, this something's going to be incredibly different than the consensus. Like that's their incentive. And obviously it looks great, and you get a lot of clicks if you say Snapchat's blowing up. I mean, that's the trend. We're still in this era where people like to see blow-ups.
Yep.
And that's just kind of this viscerally appealing to people.
And I think this one is especially, I would add just from a softer data point, what do we know about Snapchat users? They're young. They're kind of this millennial population. What do we know about millennials? Well, we know a lot of things, but one of the things we know most vibrantly as millennials ourselves is that older generations love to mock them and love to call them out while taking zero responsibility for how we actually turned out. So it makes a lot of sense that the analyst and investment community, which is typically a good bit older, 40s, 50s, 60s, loves watching this thing blow up.
Yeah, so overall, I mean, I know last time, just kind of bring it full circle, we were wrong in a lot of this. I mean, we were over-optimistic in some of our opinions.
Yeah, definitely.
Having said that, we also said, what determines the future of Snapchat? Is it really one quarter in which there are a lot of distractions and there's an IPO? No, and I think I might have even said, good or bad, you're going to need a huge number to really change the story.
Right.
And I was saying like 200 million on the upside and substantially lower on the downside. This was neither. So then you default back to, well, did the story change? And for that, you have to really do a psychoanalysis of management. And management, is susceptible to everything that every other human being would be susceptible into that circumstance. Yeah, you can say that if you were in that position, or if I was in that position, I would have been much more laser focused, you gotta love that word, and disciplined with respect to managing the business. But the fact of the matter is, no one's gonna be like that. Everyone's susceptible to this. I mean, you look at a stock, I mean, it's the whole endowment effect. A stock that's going up, you want to continue to hold even though it hits your target because you think it's going to continue to go up. So, I mean, that's what this quarter comes down to. And I have to say, I was not unimpressed with the conference call. I'm not going to say they blew it out of the water.
Right.
They had a couple guys on there who were a little shaky. I thought Evan Spiegel did a lot better than Mark Zuckerberg did when he...
For a founder and CEO, and we talked about this while we were listening to the call, for a founder and CEO who was watching his stock plummet 25%, he, I thought, stuck to the script in an appropriate way.
Yeah.
But most importantly, I felt like he had a good script, which is exactly what they're trying to achieve. He used a lot of softer language about creativity and things like that kind of made us roll our eyes at times.
Yeah.
But what was interesting, I mean, one of the big paradigms everybody was looking for was how does Snapchat respond to Facebook and Instagram, and now that they have Snapchat-like features. Mm-hmm. Numerically speaking, since Instagram rolled out their Instagram stories or what have you, which is their Snapchat-like feature, The most discernible and noticeable thing that we have seen user-wise with Snapchat is that growth has accelerated over that time period. That's a fact. That's a measurable fact. Growth has accelerated since Instagram rolled out their competitor. Second thing that you can kind of discern out of this is Spiegel doesn't really seem that shaken. You know, they asked him about that, and I don't have the exact quote in front of me, but he basically came out and he kind of said, well, we're a creative company, as I've said before, and one of the things you have to get used to when you run a creative company is that everyone's going to try to copy your ideas.
I mean, look at, and I mean, these companies, they don't manage on a quarter-to-quarter basis, which you can take some argument with. I mean, it's, because I mean, it can disregard some responsibility to the quarter. Having said that, I mean, you look at Google, which went public in 2004, is now 13 years old as a public company. What happened in their December quarter? Like, they just got blown up because they didn't hit the numbers in the quarter. And now this quarter, they hit the numbers and the stock goes up. So there's a discrepancy between the way Wall Street views these tech companies and the way that management views these tech companies. And you know, this is a noisy quarter. This wasn't a great quarter. It was a fine quarter in our view. Market looks at the numbers. Algos look at the numbers. The amount of shares that are out there are very thin. I mean, it's just not, there just isn't that many shares relative to the market cap that you can actually trade because they haven't expired, the lockup hasn't expired yet. But so, you know, they didn't have a great quarter, but you know, you're just going to have these moves, especially at a young company, just accentuated, and that's why you're seeing the stock down 20-25% or whatever it is. And I think it's an overreaction, a dramatic overreaction, because I don't think the overall story and the value proposition for Snapchat has changed materially, but you're going to see people react to it.
Yeah, the story hadn't changed, and again, faulty, we believe, expectations, particularly on daily active users. Again, we missed on some stuff. We were off. We said we'd come out and do a video and say what we missed on. We've done that, but I stand by the fact that 166 million daily active users is a good number. I mean, I stand by, like, by good, I mean firmly in the range where the stock shouldn't have moved a whole lot. You know, again, if they'd come out with something in the 170s, I would have expected the stock to run up. If they actually flatlined as opposed to growing by 5% in just one quarter, I would have expected the stock to sell off like it has. But again, they accelerated growth sequentially quarter over quarter. You start to look at revenue, it's up almost 300% year over year, which again, you expect. That's a relatively low bar. The other thing that I think is just really compelling is Snapchat was much closer, in my opinion, to kind of startup when they IPO'd. You know, you actually look at their revenue, and this is something they brought up a couple times on the call. I think they probably could have used it a little bit more, but just how new their monetization platform is, it's incredibly effective. I think almost everyone would agree that they're pretty effective at monetizing, especially given how much potential is still there, how much runway, how much ad load is still remaining. But they're pretty effective at monetizing, and as I said time and time again, hey, we ran our first ever ad in the fourth quarter of 2014. So we're basically talking about 4 quarters in 15, 4 quarters in 16, and 1 quarter in 17, where they've actually been running advertisements for a full quarter. So, you know, in quarter 9 of this ad platform, we're still seeing really, really impressive growth on an ARPU basis as well as on a total revenue basis. That's really solid. I mean, that's something to be looking for. I think even this year, it's going to be interesting to see what happens. I mean, I think we're going to have to, both internally here at Narwhal, the parent company of Tusk, as well as just everybody that owns Snap or wants to look at it, needs to be extra diligent on what numbers are being included, whether it's in the Bloomberg estimate or any kind of consensus data on daily active users, because we know that's going to be what drives the story. And as I said, we think that was completely misguided in terms of what the expectation was heading into this quarter, and we think this is a misplaced sell-off. Ben, any closing thoughts?
I'll just leave you with this. I mean, we saw a similar circumstance at Facebook. Actually, Facebook was even uglier than Snapchat. Facebook had fallen from $38 at the IPO to $26.84 when they reported on July 26th. After they reported, the stock fell 11% to $23.70. For those Snapchat bulls out there, I don't have reassuring data for this because after 2370, it then fell down to 1773 on September 4th. However, that was the low point. That was when you had hit max apathy. I remember because I was interested in the stock at 30, and then I didn't buy it, and it kept falling, and I felt really good about not buying it, and it fell to 1773. I'm like, this company, like, it's managed terribly, and it's going to continue to go lower. That's when it bottomed, and I don't think you're seeing that necessarily bottoming process right now in Snapchat. Having said that, that's extraordinarily difficult to call. Yeah. And you did see a bottom in Facebook 2 months later, and now the stock's 10 times higher than that.
Yeah.
So, you know, these things happen in early stage IPOs like this, and you know, I think there's a good chance that a similar thing happens to Snapchat.
I'm going to wrap up by doing something really compelling and reading a few quotes from an article. This is from Wired.com, which is, you know, more of a technology publication, but it's from a business reporter, Davey Alba. I think sometimes it's good to kind of take a step back and think, hey, what's attractive about Snap to begin with? It's really the technology. It's not, you know, nobody bought this for earnings. Let's just be realistic about that. It's interesting how many
near-term earnings.
Yeah, right. It's interesting seeing how many people now are talking about, oh, well, they missed the earnings numbers.
Yeah.
Like, nobody would have cared if they met that, if the daily active user number wasn't right. But some comments from Davey Alba in this Wired.com post, and we'll make sure we have it linked in the Seeking Alpha thing. He said, needless to say, Snap's long-term potential won't be the story many investors will want to hear after these dismal numbers, but they should cut Snap some slack. Snap is like no other company at the moment, even taking Instagram's aping of many of its features into account. Snap is a niche platform, says Brian Weiser, a media industry analyst at Pivotal Research. It's not an alternative, but a complement. On an internet where fake news, crappy ads, and hate abound, Snap exerts tight control over what gets featured on its platform and how that content gets shared, an approach on which Snap has built a dedicated audience. It's a business model far removed from Facebook and Google, both built on scale and the very long tail of online content. 3 months isn't long enough to tell for sure how Snap's alternative approach will play out. So I think that's kind of something to keep in mind. You know, last thing I will say, just from this article, concerns about Snap don't quite capture how well the company may be positioned to capture more fundamental changes in the online advertising market in the years to come. Spending on digital advertising as a whole just surpassed television for the first time, $72.5 billion in the U.S. in 2016, compared to TV's $71.3 billion. There's a structural shift away from TV advertising dollars and to the internet, says Christos Charalambos, a senior strategist at Edge Wealth Management and a Snap shareholder. At the same time, Snap as a medium offers TV-like qualities that could attract ad dollars from both pots of money. So lots to like about the story. That's, you know, when we talk about the story not really changing, the position not really changing, that's what we're talking about. You know, we're honestly pretty ticked off that people were off base, we think, on expectations, and that there was a pretty bogus number being used, and that framed the moments immediately following the release of those numbers. But at the same time, this is something that Snap's got to continue to execute on. Shift focus away from stock price and IPO to executing on their story, continuing to create creative content, which is what they put such a big emphasis on, increasing ad load, and I think it's still a compelling story to watch. Still a stock that we own. We're probably going to continue to hold on to it. You know, again, we didn't buy it for a quarter's earnings. Hopefully, you didn't either. I think that's it. I think we'll end it there. And thanks as always for being here. Follow us on Twitter at Tusk Media LLC, Facebook.com/Tusk Media LLC, YouTube.com/Tusk Media LLC, and leave us some comments if you're on Seeking Alpha. Talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.